This segment is brought to you by Think or Swim. For more information, just click the Think or Swim banner on the front page of TFNN.com.
Hi guys, welcome to the show. A little bit late today. A couple of technical issues. For once, it wasn't on my side. And here we go. Let's get into the S&Ps. We only got, with breaks and everything included, I think we got 20 minutes today. By the way, if you guys want to call in, 877-927-6648. Would love to hear from you. 727-445-1044 internationally. And I was just showing some pictures in the den earlier. There's no Japanese World War II vets left, I don't think, anywhere in the Philippines. But I'll do some checking on that. Nice place I went to this weekend. I was just showing some photos. It's a great scene up in the mountains here. You get a view of the volcanoes, nice weather, fresh food, fresh alcohol sometimes. Here's the S&Ps. And here's the daily situation. And just to get right into it, we've been really focusing on some of the breadth situations and how mixed up they were really. And the weeklies possibly getting ready to roll over. And what we want to do here is kind of really figure out what the numbers actually are. 2038 on the daily. I've been talking about, this thing feels really heavy. The breadth is a little mixed up. I normally don't take a stance just kind of out of the blue. I just kind of let the profiles regulate everything. But, I hate to say the word feel, but it just sometimes, you got to use the inflection points and use what's presented to you. And when I pull up the scanner and I look at the so-called speed dials up here, we've kind of been somewhat breadth negative on our intermediate for a while. And these have been a little mixed up. I'm looking at the S&P breadth right now. And, the weekly's still positive, but that may change. Got a Monday morning here, had a little bit of a pullback. I got to keep our eye on that. But I'm expecting this to just kind of do a flush. Now, is that going to be a long-term flush? Is it going to be a change of tone? Are we going to get caught somewhere? If we break and start closing below that 1938 area, 30, things on the lows want to go lower. Remember, this is kind of compressing down in, and I really feel that we could at least come down to 1981. Now, what's going to happen there? We got to look at that. We got to look at the breadth. We've got to take the inflection points for what they are, and maybe by then we'll have some new daily profiles. But I actually fully expect this. Again, remember to put your stops in doing any kind of, MOs on any type of trade. But I think we might head lower here, guys, and that's based on a couple of things. I don't know what's going on behind me over here. But that's based on a couple of things we've been talking about for a while. And the dollar actually, the market has been liking a strong dollar. And the dollar, as we look at it, may be changing its tone also now. Looking a little heavy also, and we kind of had a new profile up here last week, new support on that. Now it's going to be 95.46. So if the market senses that this is kind of going to be over possibly for a little bit with the dollar, and you've got this 96.41 sitting here too, 42 on the intermediate, the dollar could start racing down into that 95 support area, or 95.46, 47. And the market, may kind of slough off a little bit, sensing that the mighty dollar may be just turning down just a tad here. So keep all those things in mind. You've also got, this staring you in the face just to kind of look at some relativity situations. These things weren't open, hardly at all on Friday. And look what happened with the notes and bonds. This is why we always talk about not really being too aggressive ever on the short side on notes or bonds. And, did we meet any targets on the 10-year? Not yet. We still got 130.20 up there. That's kind of previous recent highs. And, that's just going to possibly be a resting point for that. I don't, a lot of fundamental talk out there. I know you guys are keeping abreast of this, but, we've got a lot of talk, the earnings season, and, these dollar international related companies, going to see some numbers that are not the most attractive things in the world. And these notes and bonds, I mean, I think are just kind of telling the story here. And this is in the face, as you know, here's a 30-year. This is in the face of, in 164.24, now it's going to be support on that. As we had talked about, it's really been violent around here lately, but that's going to just kind of, you have to put the stops in, turn the rents the same way. We talk about that all the time. But this is in the face of, Yellen and company continuing to, well, they're going to temper whatever, but with the most gentle statements, and they're going to look for those gentle statements, obviously, the guys on TV. But, this is in the face of so-called better conditions, business climates in the U.S., whatever. So take that for what it's worth. The notes and bonds are starting to climb, starting to break out a little bit. That could reverse. Always keep that in mind. But the U.S. stock market, dollar market, earnings, notes and bonds going to breakout situations, doesn't look like the rosiest situation for the U.S. stock market, at least in the interim. Gold priced in dollars, obviously liking a little bit of a pullback in the dollar. 1208 now support on the dailies. That's where you got to kind of look at as support for the June contract. That's what we're looking at on gold. Silver, a little bit different animal, but we talked about some targets above 1721. That's been satisfied, and on the daily we had a very similar situation, 1724. So we've kind of touched that and backed off just a tad. Talked about a target-rich environment up there. That was pretty much it. It's been satisfied again. Will this go higher? Based on the dollar possibly relaxing a little more, I wouldn't look to short silver right now. I don't think you can look at these inflection points on the weekly and daily and say, hey, this is the greatest short in the world. I think this is a situation where you just kind of like sit tight, and I hate saying sit tight more than often, but this is one of the situations that I think we might want to put that into action. We got to take a look at crude oil just to cover some of the usual suspects. XLE, I talked about last week. That thing just looked like a better situation than trying to trade crude outright. Again, we talked about having to wait and see if crude was going to stay above these profiles above 48 and then above 49 on the weekly situation. That's held. The profiles, and on the long-term basis, we've got a profile that's kind of an inside profile here, and it's ratcheted up just a tad the floor. So you got 48, 49 support on the long term, and you got some targets above 53.67 on crude. And I think they're going to be hit. I mean, I think we're going to ramp up on crude oil, and crude oil obviously likes a little bit weaker dollar as far as price action. So keep that in mind. That's what we're looking at on crude oil. So we got to go into a couple more things that are dollar somewhat related. Obviously, 6 different currencies comprise the dollar. We're going to look at our weekly on our euro here, and we talked about it will be just a gift to get back into this couple of weeks ago, into this 112.45 on the euro. But since we've got a new profile, we've got a new inflection point to seriously pay attention to, 111.04. And as we look at the daily, 110.05, but we got 111.04 sitting up there. So 111.04 is going to be maximum resistance points on there, and it kind of coincides to some degree with the dollar possibly relaxing down to that 95.5 general area. So I wouldn't be looking to short the euro yet. I'd look at that 111.05 area as something to pay attention to, because remember, I'll just get back to the dollar for a second. That's going to be possibly, in tune with the dollar coming back to this 90, let's just call it 95.50 area. So not probably the right time to buy the dollar, not probably the right time to sell the euro. I think this is just kind of a sit tight. You got better days ahead as far as inflection points, and that's kind of the way we're looking at that. Let's take a look at the Aussie dollar. This has been something we've been relatively bearish on, but we talked about not being able to do anything. Here's the long term, and getting below these long term profiles. Got a new profile that finally appeared, and you got this 77.19 sitting there, and you've also got, these are in the scanner, You got 76.93. So 77.19, 76.93. There's a DMZ there. I think you could leverage off of, and you just got to wait until the market comes to you. And I hope that the Aussie dollar, even though it's not one of the the dollar related components heavy, you could wait until that kind of gravitates up there, right in the middle of a profile here. Definitely bearish. Not a lot of reasons to go long the Aussie, put it that way. So it's kind of okay to be short, not okay to be long, still the Aussie. But the good news is you know where to put the stops above that 77.20 area on the Aussie dollar on the short side. We don't look at this too often, but I want to take a look at the Canadian dollar. This is where our weekly situation is. And you got, let's just state these, 120.59 sitting down there on the weekly, but you kind of getting down into this area. I think we're more than likely going to do a little bit of a flush here on the Canadian dollar. That's why I pulled it up. Scanner's saying you're at the bottom of a profile. If we remember the general tone of this, when we get outside these balanced areas, there's quite a few people that might have to start covering this. So we're looking at this. It's just right on the precipice of a cliff, in my opinion, and we could see the Canadian dollar finally come back into that 120.59 area. Make sure you put your stops in on situations like that. All right, let me close this out. Here we go. Got a couple of things coming out with earnings this week, and we're just kind of flying here because we don't have a lot of time today. And got Alcoa. Now, we've been looking at Alcoa lately. Okay to be short, not okay to be long. We talked about, do you short a $13, $14 stock? Yes, you can. Just put your stops in. Worst, bad thing about trading stocks is overnight you can have some significant gaps. Got a new yellow or orange bar trying to appear on our weekly. That was, let's see here, hold on. That was last week. We're going to probably have a new profile. We talked about looking for that, a new weekly profile that's probably going to appear today. And we may have some people that start to cover Alcoa. So this is the action. We talked about, letting the daily or we always talk about a time frame out to the right to regulate to the left the time frame that you're trading on. So in this case, you're trading the weekly and you're using the daily to kind of regulate that trade. Since these earnings are coming out on, I think they're coming out on, is it Wednesday on Alcoa? Let me see here. Yeah, Wednesday, after the market on Wednesday. So as you look at Alcoa, this trade, even though could be the international dollar related situation here, and you got some kind of lag time earnings that are going to come out, and I don't know if this is the best situation to stay in on the short side. So I'm kind of looking to this as, again, we always talk about, let's wait until these announcements come out. I think you got to sit tight on this. You're going to have some new inflection points coming today, more than likely, on Alcoa on the long term. And the short trade made some decent points on this without question, but the short trade on Alcoa may be over for a while, and that's the way we're looking at that. A couple other stocks that are coming out with earnings this week. Let's just take a look at Bed Bath & Beyond. Oh man, here we go. All right. So Bed Bath & Beyond is coming out. Let me see here. Is it Tuesday or Thursday? Let me see here. I think it's Thursday. Let me just make sure. No. Sorry guys, I'm just rechecking this. So, well, maybe it's Wednesday. Hold on. It is Wednesday. I'm sorry. So as this is coming out the same day as Alcoa, it's coming out either before the market or after market. It doesn't even say exactly when that is. But as we look at this, 75.29, you got to pay attention to that. That's where you got to put your stops in. But again, I think waiting patiently for this to have announcements that come out. You've got 72.18, 75.29 down there. If all that's breached, I think you're going to have to sit on the sidelines after that announcement on Bed Bath & Beyond. Excuse me, if you've been looking at this from the long side, it's held up relatively well. That's the situation on Bed Bath & Beyond. I got to pull this one up. This one's coming out this week too. WDFC. Who knows what that is? WD-40. And here we go. My favorite thing to have when I'm working on my lawnmower. 85.84. Unfair highs on the weekly. I hear the music. We're going to be right back. We're going to finish up WD-40, and then we're going to cover some of the things before the market opens today.
Has the current market volatility continued to stop you out of trades when the market spikes against you? Now is the perfect time to open up an account with Nadex. Nadex, the North American Derivatives Exchange, is a brand new, completely regulated Chicago-based exchange, and unlike most other exchanges, Nadex allows you to trade directly through them with direct market access when using their completely free trading platform, which also features real-time charts and full customization capability. One of the advantages of trading with Nadex in volatile markets is that your risk is always capped and you have the ability of keeping your trades open even when the market spikes against you. Nadex is completely brand new with a line of unique trading products that are unavailable anywhere else. See how it works at nadex.com. That's NADEX.com. Or click on the Nadex banner on the front page of TFNN.com. Futures and options trading involves risk and may not be appropriate for all investors.
Tom O'Brien's weekly gold letter, The Gold Report, gives complete and concise coverage of the entire gold market. Inside, you'll get Tom's commentary on gold, the dollar, the rand, the bond, the XAU, the HUI, and detailed coverage of nearly 25 mining stocks. He'll give you the entry price, price target, and stop price of each stock trade. The Gold Report is a long-term newsletter where the focus is on building real wealth through the management of a successful portfolio of gold stocks. With a lifetime of knowledge and almost 12 years of writing his informative weekly newsletter, The Gold Report, Tom O'Brien can provide you with the important market information to help you make better trades in the gold market. Don't let the next bull run in gold pass you by. To get a month-long free trial to The Gold Report, an $85 value, visit the front page of TFNN.com today.
David White's newsletter, The Technology Insider, is focused like a laser on finding the next big things in technology. If you had invested only $10,000 in Microsoft in 1986, you'd have been a millionaire by 2000. Disruptive technology like Microsoft's is the key to these massive long-term profits, and the Tech Insider is the vehicle from TFNN to capitalize on these opportunities. This is the go-to newsletter that identifies, monitors, and profits on mostly little-known cutting-edge companies with great long-term prospects. David's experience is as an inventor of Emmy-winning animation products for TV and Hollywood that propelled a company public. Match that with 14 years as a full-time trader, and he's uniquely qualified to guide you through the light-speed world of ever-evolving high-tech. If you're ready to ride the next big technology bull market for less than $40 per month, log on to TFNN.com and get your 2-week free trial to the Technology Insider. Get in on the ground floor of the next big thing today.
We're told to follow our passion and everything else will fall into place. I hope that's what each of you are doing each and every day. Hi, I'm Steve Rhodes, host of the Money Master Show at TFNN.com, and my passion for technical analysis is what led me to the most fundamental discovery in pattern recognition, the Rhodes Momentum Indicator, market scanner, and trading strategy, a set of tools that identify the momentum and power of the trend, the likes of which have never been seen before, for every market and every time frame. Yes, folks, the trend is your friend, unless unless you're on the other side. New to technical analysis? This is the place to start. And experienced traders take advantage of the trend like never before. Experience the power of the Rhodes Momentum Indicator each day, available to subscribers of my newsletter service, Mastering Probability. I guarantee your satisfaction for the next 30 days unconditionally, so there's no risk to you other than being on the wrong side of the trend. Mastering Probability. Available on the homepage of TFNN.com. And folks, live with passion.
Catch Steve Rhodes as he teaches techniques on technical analysis using pattern recognition, celestial charting, Fibonacci, and other tools. The Trader's Edge, next on TFNN.
Welcome back to the show. We looked at WD-40. We're just going to move quickly. We got like 4 minutes left here. Get Hang Seng. This is our situation on Hang Seng. Joey was on the show last week. He talked about, this thing may move a lot higher. Here's the Shanghai. I just want to show you what's happened after we kind of talked about that. He said we might have to start chasing this if we didn't come down into this 37.15 area and get down below there and wait for some pullbacks in the 35.12. This kind of churn, and now we're just kind of lifting again on these Asian indices here. So that's the situation on some of the things that Joey had talked about when he was on the show last week. Here's the situation on the XLE. We forgot to kind of do a relativity look at this when we were talking about crude oil earlier, and looks like we're trading around 78 pre-market. Remember, 80 is the target again on this. Dollar may just allow crude to lift a little bit, stops below that 49 or 48 based on your appetite for risk. The XLE, I think you've got a little bit of an easier situation here. 76.19 down below there would be stops where I would be looking at just kind of saying uncle for a little while, and that's the situation in the XLE. Let's take a look at the XLF, and we always look at this, and I'm still bullish, or still bearish on this. You've got the 2428 sitting there along with that, and remember, profiles appearing above price action, not bullish. A wide profile up here. We could see some downside movement on this finally, and then you got that 2447 to kind of say uncle above there. And I know as we look at this is kind of churning, compressing higher. I think we could have a little bit of a pullback on the XLF, but the good news is you know where to put your stops on this. Let's take a look at the healthcare. This is something that we had been talking about for a while, the strength, and it's no mystery, technically speaking, how this has looked. Got to close below that 72.70 area, weekly unfair highs, and now we're getting into the daily unfair lows. So what do you do with this now? That weekly close, just getting back into the balanced area, I'm still looking at this from a relative strong standpoint, and looking at stops below 71.74 on healthcare. We're trading about 72 pre-market right now. So again, just a little bit of not a big deal coming down into the weekly fair auction. We could get back above there, and it could be a safety play, if nothing else, if the market just continues to get creamed here, or gets creamed, not continues. All right, so let's go back to the S&Ps really quick. We got about a minute left. My take on this is not to buy these bounces down here. We're going to kind of use this and pay attention to what's going on during the market hours, looking at these speed dials. And any breaks, especially closes below 2038, in my opinion, are going to have to be sold. And that could be just a rainstorm of people having to cover some of their longs to buy the dippers, whatever. They've been right for a long time, but I think we've got a little bit of leverage on our side. We may see this thing relax a little bit, and that's also considering the dollar may come off even a little bit more. NASDAQ numbers really quick before we go. We talked about this profile appearing above. This is, something we said that's not very bullish whatsoever. Now we're kind of daily getting down here, some new near-term lows. Where's the targets down below initially? 42. Sorry, guys. Let me blow that up. 42.41, but remember that's very similar to those S&Ps getting down below 20.38, and we may see the thing flush also. Guys, you've been great. We'll be back again tomorrow. Stay tuned for Steve Rhodes.
Since 1984, Basil Chapman has been using the Chapman Wave methodology to advise traders of his expert market opinion. While originally hand-drawing charts from the late 1970s into the 1980s, Basil noticed that prices under most circumstances virtually always had a certain number of legs to the upside before declining sharply. Later, Basil found that computer software, which included the standard market technical indicators, enhanced the degree of accuracy in calling price turns, as well as market trend calls. Thus was born the Chapman Wave sequence. Using the Chapman Wave methodology along with other indicators, Basil Chapman advises his subscribers of his expert market opinion each market day with his opening call newsletter. Right now, you can get a 2-week free trial to the opening call, Basil's daily trading newsletter, by visiting the front page of TFNN.com. Cancel at any time during that trial and pay absolutely nothing. Get your 2-week free trial to Basil's newsletter, The Opening Call, today by visiting TFNN.com.
This is TFNN.